The latest official data shows that India's headline retail inflation was at an 18-month low of 4.7% in April versus 5.7% a month ago. This significant drop in inflation indicates that the monetary policy adopted by the Reserve Bank of India, RBI, is on the right track, according to RBI Governor Shaktikanta Das. The RBI has been raising the repo rate, which is the rate at which it lends to commercial banks, since May 2022 to meet its inflation target of 4%. The repo rate currently stands at 6.5% after a total of 250 basis points hike in the past year. However, in its last policy statement on April 6th, the RBI decided to pause the rate hike cycle and wait for the impact of the previous rate increases to play out. Das expressed confidence that the RBI's projection of 6.5% real GDP growth for FY24 is achievable, despite lower estimates by some international agencies. He also highlighted the strong underlying growth momentum in the domestic economy, as reflected in high-frequency indicators like steel, cement, and petrochemical sales. Das also pointed out that the rupee has been more stable than other Asian currencies amid the shocks of the COVID crisis and the war in Ukraine. RBI Governor Shaktikanta Das said that he and his colleagues in the RBI are confident that the monetary policy is on the right track. This statement came after the release of the official data on inflation for April 2023, which showed a cooling off in the headline inflation to 4.7%, within the RBI's target range of 2 to 6%. Das said that this development was very satisfying and validated the RBI's accommodative stance and liquidity support measures to revive the economy from the pandemic-induced slowdown. Das also expressed optimism about the growth prospects of the Indian economy, which he said was expected to grow at 6.5% in FY24, despite some divergent views among analysts. He said that India's growth would contribute 15% to the world growth in the year, which was no mean achievement. He attributed the growth momentum to the pickup in private investments, especially in sectors like steel, cement, and petrochemicals, where he said entrepreneurs were witnessing higher sales every month. He also stressed the need to continue with reforms and access the best of technology to enhance productivity and competitiveness. Das also assured that the RBI would remain vigilant and proactive in managing the evolving macroeconomic situation and ensure financial stability. He said that the RBI would announce its next policy review on June 8th, when it would take into account all the relevant factors and data. The RBI has raised the repo rate by a total of 250 basis points since May 2022 to meet the 4% CPI target. This means that the central bank has increased the interest rate at which it lends money to commercial banks by 2.5 percentage points in a span of 1 year. The repo rate is a key monetary policy tool that influences the cost and availability of credit in the economy. By raising the repo rate, the RBI aims to reduce the excess liquidity in the market and curb the inflationary pressures that have been rising due to supply-side disruptions, high fuel prices, and global commodity price shocks. The RBI's inflation target is to keep the Consumer Price Index, CPI, within a range of 2% to 6%, with a midpoint of 4%. The CPI measures the change in the prices of a basket of goods and services consumed by households. The RBI has been facing a challenge to maintain its inflation target, as the CPI has been consistently above 6% since June 2021. The RBI Governor Shaktikanta Das has said that inflation numbers confirm the right monetary policy stance and that the central bank will continue to act preemptively and decisively to anchor inflation expectations.